Hello everyone, this is Dr. Murlidhar. Today, in this video, I am going to explain different types of markets. Before I go further, just I would like to tell you what is the main theme of different types of markets. Here, markets are different spaces and different systems where buyers and sellers interact each other to trade goods or services or assets. So they can be classified into different types based on their structure and based on the function, based on the nature, what they are trading. So I am going to explain you different types of markets now. So first and foremost, what do you mean by the market? See, a market is a platform where buyers and sellers come together to exchange goods, services, or information. So, the word market is derived from the Latin word mercatus, which means trade, commerce, mercantise, a place where business is transacted. Again, I'm going to tell you it is a platform or it is a place where buyers and sellers come together to exchange their goods or services or information. Fine. The market can be physical, like marketplace, or virtual, it is an online platform. So, what is the definition in of the market? As per the definition of Clark and Clock, a market is a center or an area in which the forces leading exchange title to particular product operate and towards which actual goods tend to travel. So the key element of market is the interaction of between supply and demand, determining the price and quality of goods or services exchanged. Where the supply and demand intersect each other, here the equilibrium price. So the price can be determined. Having said that, move on move on to further. What is the need for the market? What is the importance of the market? What is the significance of the market? As I mentioned earlier, it is an exchange of goods and services, and it can be adjusted demand and supply through price mechanism and improve the quality of life of the society and introduces so many new products as well, new modes of life to develop product by enhancing the market segment. Right. Now, the main topic of discussion over here is the classification of markets. As I mentioned in the theme, the market types are on the basis of area, on the basis of goods, on the basis of economics, on the basis of transaction. So, different I am going to explain in clear cut way. First and foremost, on the basis of geographical area or on the basis of location. First one is a family market. When exchange of goods or services confined within the family or close members of the family will be called as a family market within the family itself. Now, what is the local markets? First, I'm telling you within the family. Now, local market, when it comes to the local market, the participation of both buyers and sellers operates within specific area that belong to the local area or areas, maybe town or village. All these will be called as a local market. The best example of local markets, town markets, local markets, right? Then move on further. See, what is the national market? So, on the basis of the location or geographical area, another say, I mean, not classification is a national market. Means operates within the boundaries of a country. Domestic e-commerce sites is a best example of national market. So here, the same product or service is offered to the customers who are spread around the country. It has several locations in the country in order to reach those customers. A startup or small business can be focused in the national market. It covers entire country. Domestic stock markets is a best example of national market. Having said that, let me move on to the international market. So, operates globally, involving buyers and sellers from different countries. It is international platform, global trade platforms or international trade. So, centralized marketing strategy will be applied in international marketing strategy. When I talk about centralized marketing strategy, production and sale of goods from the central location rather than utilizing specific marketing forces each national market. Centralized markets prepare strategies that cover large geographical areas and take cultural difference into the accounts. They will also see the cost benefit analysis, how much cost we are incurring and how much benefit we are getting, the economies of scale. So, in this, often normally less expensive with much less duplication. Coming back to the decentralized marketing strategy, uses local production facilities, advertising, and market research to target international markets. Provides company with close proximity nearest to the market, flexibility spot and response to the trends, and the ability to sensitive to different cultural customs. So, in a nutshell, the international markets operates globally involving buyers and sellers from different countries. Then, the second classification is on the basis of goods and services or on the basis of commodities or goods. First, product market where particular product is bought and sold. Example, agriculture products, all. When I talk about stock market, market where stocks and shares, bonds, securities, debentures, or etc. are bought and sold. When it comes to the bullion market, market where silver and gold are bought and sold. So in this market, metallic trading takes place. Then move on to the further. Based on the type of the goods or services traded, how it is going to trade. For example, commodity markets for trading raw materials are primarily products like oil, gold, wheat, or coffee. When it comes to the financial market, stock market, bond market, forex, and derivatives market. For trading financial assets, stock market, as I mentioned in the good, shares of companies bought and sold, bond market, companies issue debentures, debt instruments, Forex market, it is totally related to the refers to the currency exchange from dollar to rupee, rupee to some other like that. Derivatives markets, every all agreements will be done in the future, in the specific date and specific time, in specific price will be happening in the future. See futures, options, and other financial contracts. Then coming back to the labor market on the basis of services, where employers and job seekers interact to negotiable wages and employment terms. When it talk about the retail markets where final goods are sold directly to the consumers like supermarkets, e-commerce, etc. Then on the basis of competition structure, see here there will be perfect competition and imperfect competition. When I talk about perfect competition, many buyers and sellers with no control over prices. Example, agriculture products. When in terms of imperfect market will also be coming under monopoly, monopolistic, and oligopoly. Then I will tell you. See, first I would like to talk about perfect competition, homogeneous product, free entry and exit. The features of the perfect market or no transportation cost, perfect knowledge of prices and technology, large number of buyers and sellers, no artificial restrictions, free entry and exit, all will be the features of the perfect market. If I talk about imperfect market, the different types: monopoly, monopolistic, oligopoly market, and monopsony too. Then now I would like to tell you the differences among all these. Monopolistic, number of sellers many, degree of product differentiation will be there, differentiate to sell at higher price, barriers to entry is low, pricing power of firm some, non-price competition, advertising and marketing strategy. The monopolistic competition nothing but many sellers offer similar but slightly differentiated products like restaurants, clothing brands, etc. Then coming back to the oligopoly, few big companies or few large firms will be there, sellers, same type of product will be selling, and barriers to entry is very high. Some pricing power will be there, advertising and different products. See, that when I talk about oligopoly, in a nutshell, a few large firms dominate the market. For example, automobile or telecom industry. Then coming back to the monopoly, only one seller, unique products, very high barriers to entry. Pricing is considerable. Price is macro, and non-price competition will be there in the advertising. Monopoly is a single seller controls entire market. For example, utility companies in some regions, it will be there. If it is India, Indian Railway is a monopoly market, right? When it comes to the monopsony, single buyer and many sellers, only one buyer is there and many sellers will be called as a monopsony. Buyer and seller of unique product, barriers to entry is very high, price decided by the buyer because of only single buyer, negotiation skills for better buy price. Basically, this type of markets are rarely available in society. Then, on the basis of transaction, spot market, goods are exchanged and the physical delivery of goods takes place immediately without any delay. When it comes to the future market, that delivery will be done in the future dates, takes place on the different dates. Then, if I talk about on the basis of regulation, means regulated market and unregulated market. These are the types of markets which are organized, controlled, and regulated by statutory measures. Stock exchanges of different Mumbai, Chennai, Kolkata. So, basically, the regulated market, government controls and monitor activities, financial markets under regulatory bodies, right? In terms of unregulated market, operates without significant oversight. Informal sectors of the black markets, means it is not regulated by statutory measures, is called unregulated. This is a free market where there is no control with regard to price, quality, commission, etc. Demand and supply determine the price of the goods. Then, on the base of time, very short, supply of goods is limited, cannot increase the supply, determines demand determines the price of such commodities. Means the time element is very less. Very less. If short period, production can be increased to some extent. Demand plays an important role in price determination. When it comes to the long period, long term, supply can also be adjusted. Supply plays important role in price determination, also called nominal price. Very long, both supply and demand can be changed depend on the taste, habit, fashions, preferences of the customers. Having said that, let me move on to the classification market on the basis of volume of business. So it is a retail market and wholesale market. Retail market in the sense that total, it refers to the system where the seller or retailer is directly selling the goods to the consumer. Is a acting intermediary between manufacturers or wholesalers and at the end of the customer. The retailer is directly reaching their goods and services to the customer. So he's selling the goods to the customer directly. It is when it comes to the wholesale market, it is a market where goods are sold in bulk and large quantities, typically to the retailers, businesses, or other wholesalers rather than directly to the end consumer. So wholesalers selling the goods to the retailers, in turn retailers will sell the goods to the consumer. Then, on the base of functionality, so the primary market and secondary market. In the primary market, new goods or securities are introduced. Basically, in the stock exchange or in IPO, initial public offering in the stock market is the best example for primary market. Where secondary markets, already existing securities will be traded. So, in the stock exchanges, already existing securities will be traded. So previously issued goods or securities are traded in the secondary market. Then, having said that, the based on the interaction mode, physical markets and online markets. When I talk about physical markets, buyers and sellers meet face to face. Farmers market, shopping malls will be the best examples for physical markets. In terms of virtual or online markets, transactions happen digitally. Amazon, eBay, Flipkart, all these are the online markets. These are the e-commerce platforms. Then, so the other one is a specialized markets. Here, auction markets, block markets, and gray markets. When if I talk about the auction markets, is goods are sold to the highest bidder. The person who is bidding highest price will be getting that goods or service, means that is art auctions. Example is the black markets, illegal trade of goods or services, smuggled goods. Gray markets, legal but unofficial or unauthorized trade channel, resale of goods without consent will be coming under the gray markets. So then these are the different classifications of the market. Now, what is the marketer? Who is this? So, the marketer is a person who identifies set of potential customers who should be interested in your company's offering is a marketer. So, then what can be marketed? It's not just goods or services, even people, events, experiences, places, properties, information, even idea can also be marketed, and organizations can also be marketed. What is the role of marketer? The marketer role is instigator, means the person who initiate the things. Initiation means without prompting somebody, you are taking your own step without thinking something better in future, means you are taking initiative. Instigator means taking initiative of something. Innovator, think differently. Innovation product will be supplied. The role of marketer. Integrator, integrity, honesty and integration of different products with each other. And implementer, the person who implements the ideas will be the role of the marketer. These are the different classifications, role of the markets. Thank you. Thank you for staying with me. Thank you for your support and encouragement. Thank you, one and all.